Hello, and welcome to Read the Bull, the only podcast dedicated to finance and investing books. I'm your host, Stefan Prelog, and today we have a special episode, our 2024 Fall Book Preview. And to help me with that, I want to welcome back Lee Munson. Lee is the president and CIO of Portfolio Wealth Advisors based in Albuquerque, New Mexico, and author of the timeless investing book, Rigged Money. Welcome back, Lee.
It's great to be here. I'm happy. You're looking good.
You look great as always. I think I said this in our first interview. I always enjoy seeing you on CNBC and Fox Business, Yahoo Finance, wherever it is. I love your hair, and I'm always like, what kind of style is Lee going to be rocking today? And it looks fantastic.
I try.
So really quick, we got a lot to talk about, and I want to thank you for joining me for the Fall 24.
And thanks for the professional intro. Like, let's just talk about your hair. It's obviously I do think about my hair quite a bit. It's the secret of my success. Okay, so books. I love
Come
books.
on, we'll keep it light. We'll get to it. I know everyone's dying to hear about the books you're reading, about the books we're looking forward to. But yes, we're going to keep it professional. Let's quickly make this very professional. It's August, usually a slow time, but not a slow time for markets. We've just had a volatile week in markets. So I want to ask you, what's it like when you're managing money for high net worth clients? What kind of conversations are you having when there's volatility going on and people are worrying about their portfolios?
So number one, never go on vacation in August. And for the past 30 years, cumulatively, August and September have a slight negative return. Now, what is, 0.5, 0.7 for August and September? Most months, markets mostly go up. So most months we have on average positive.
Yeah.
We used to have that old adage of, sell in May and go away. That was like when people used to take, like their horse and carriage out to the Hamptons for the summer. But over the past, 20, 30 years, all the actions in August. And I learned that back in summer of 98 when long-term capital management blew up. And as a young trader, I made my first big month where, I was at par it means I made a lot of money in August, or I did the setup in August and then it paid off by the end of the year. And I took my money and I went to Spain and, had fun. So I'm not surprised that we have this volatility in August. I'm not here to make up stories about why I think that happens. I think there's a number of structural reasons why it tends to happen. But ultimately, the conversations I have with clients occur prior to what tends to be a volatile season. So I was sort of preemptively talking about things in July and June that I said, if August gets crazy, don't call me because I don't have time to be I got to do my business. I got to do this podcast. Right. I got to do my hair. I got to be on TV. When markets get crushed, everybody wants me to be on TV as if I have all this time. And they always say, well, I'm sure all your clients are calling. No, because you try to get ahead of that. And then a few do call. So I think what was happening this summer, I kept telling people, and also in media, I kept saying, hey, this election matters. It doesn't matter to Wall Street. They only care about AI and how, it's the only way to be. But my clients are deeply concerned about the elections. I have Democrats, Republicans. I have progressive versus, very conservative. And all of them 100% strongly believe that the election has a bearing. That was especially the case before Harris became the nominee, essentially. There was this presumption that Trump was going to win and that had ramifications in the stock market. It meant the stock market was very friendly to spend a bunch of money and cut taxes versus spend a bunch of money and maybe do a little light taxing, which is the Democrat stance, or what they're probably going to do.
Well, it was the Trump trade and people were trying to, and he's also been talking a lot about crypto. So it was kind of this groundswell support.
I mean, I get it. He talks about crypto and Democrats talk about we're going to, absolve you of, student debt. Everybody has a way of paying people off directly or even more directly. So I think that a lot of what I have to explain to clients is that we're going to get a volatility. Something's going to happen in November. Somebody's going to take over. And really, what does that mean? Overall, it means that whoever wins is going to be deficit spending, right? And it's just a matter, are we going to do deficit spending and tax cuts or deficit spending and no tax cuts? But the problem is we're remilitarizing, regardless who the president is. We have a multipolar world right now. We have a lot of things going on in the Middle East. And all you have to do is have half your clients in the defense industry, which I do, to get the general gist that there's a lot of stuff going on. They're very busy. And I live next to Kirtland Air Force Base where well, you can Google it. It's all public information. We handle a lot of the deterrence out here. I think we're going to see a lot more activity there. You can just read the New York Times and surmise that there's going to be a buildup. So does this really directly affect the Dow Jones on a day-to-day basis? Not particularly, but I can tell you the idea that we're going to get our financial house in order in DC is not the case. So what that means to the average investor is that we could see some backwardation. We could see inflation going back up sometime next year as spending increases. And really, when you have a lot of government spending, you keep running these deficits, we don't default. What happens is inflation starts to tick up. I like to see some volatility. I like to see people screw up. I like to see the VIX go up, the volatility index go higher. I like to see people get concerned. I like to get, fear and greed. I need that for the markets to function properly. It's a feature, not a defect. And it gives me opportunities to do things like buy a little bit on a mild correction. And also that those sweaters I buy in the summer, right? As people start getting happy and overly optimistic, I'm not here to call a top. That's impossible. But I'm also here to unload some excess risk, some extra inventory when the volatility gets crushed, goes lower, and there's no short interest on the New York Stock Exchange. So you just have to have your core portfolio. Just kind of move like, water in a river.
So I think you make a good point. As always, you put a lot of good information out there. I want to try to distill this quickly, but basically you're saying you've had these conversations, you're seeing what was happening in the markets. Now is not the time to hedge when things are now volatile because it gets more expensive. So you were having these conversations and making sure your clients were prepared for this type of environment. Is that kind of the takeaway?
Yeah, and okay. I don't have to be right. Like if nothing happens in August or September, it's fine. I'm just saying, if you see a flurry of trades, like I didn't come up with that day. It's like I'm expecting that those things will happen, but to put a date and time on it, clients want to know, well, when do you think it might happen? It's like, I don't know, probably August. But it doesn't matter. It's just like, if this happens, just know I'm going to take action. So then when you get in the heat of the moment, people realize you're not just making this up while you're going along. Like you just wait. You let the market tell you when to trade is sort of my philosophy. Let the market, just listen to the market. It's noisy, but then about 5 days a year, it's very, very clear on what it's saying. You just have to listen to it and decide, do I want to engage or do I want to leave early and, go for a walk?
Yeah. And again, I think it's really interesting. So you're telling clients, obviously everyone's asking about the impact of the election on markets. And you're saying, you seem to be saying it doesn't matter. A lot of these things are already in place. Whoever wins, maybe on the margins, it's going to matter in terms of some tax policy. But yeah. Okay. Well, all right. Yeah. So let's quickly get into this. When you were on you were one of my first guests on the podcast. I wanted to have you back because you in your book, in your great book that was published in 2012, you included a reading list. We talked about a lot of those great things that you read. You're an avid reader and you learn a lot from what you read. So I want to just ask, what do you distill from what you read, and what were you reading this summer? Just give me like a few things, because you shared it with me.
Now, I don't know if you told everybody, but I went to St. John's College in Santa Fe, and our more famous campus is in Annapolis, right across from what was built later. It's called the Naval Academy. We beat them every year at croquet. Go St. John's Naval Academy. You're going to lose this spring. You're going to lose, like every year. They're across the street. Third oldest campus, little shill for St. John's. It's a great books program. So we start off with the ancient Greeks and we end with like Heidegger and Einstein. So my educational background was not getting lectures or reading textbooks about books. It was actually reading the original text by the original author. And that made me a good reader. So I like to go back to these original works. So Don't laugh, everybody. This is what I've been doing this summer. I know. First of all, when to sell. I mean, my wife is like, what the hell is, it's by Justin Mamis. It was written in I don't know, the middle of the last century. It was revised in the third edition was 1999. And it was written in 94.
Right.
Helene Meisler, who writes for TheStreet.com, I've known her forever. She's in my humble opinion, she'll roll her eyes. She's the greatest market technician that ever lived. She'll say, I'm just a girl with a pencil. And I was like, a very, very sharp, important pencil.
Right.
And the way that she approaches technical analysis and charting, I dig because it's old school. She actually posts her own charts every day. And she always said, you have to touch it. And years ago, when I opened my firm, I reached out to her and I said, can I pay you money to just tell me all the secrets and spend time with me? And back then she would say yes. Now don't even bother. She's busy. And so this is a book she said you have to read. So I think this is my fourth time reading it. I know, can I find something else? Yeah. But
hey, no, it's a classic.
Everything that you need to know about technical analysis, you read this and here's what you learn. You don't need 20 things. Just pick a few things, stick with it. And if you need 10 things to tell you what direction things are going, you're kidding yourself. It's wonderful.
This was originally published in 1977. And the New York Times did say,
and then it's 94. I've got the third edition.
The New York Times called it one of the 2 or 3 best books ever written on the stock market.
And the cheesiest cover of all time. I mean, look at this. Is it see the bankers blowing bubbles? So the cowboy, and then it pops, and then he falls down to his death. I mean, this is what I do this is what I do at night. So Thank you, Stefan. I didn't know that it was considered. I thought it was an obscure book that my friend told me to read. And now that you told me it's one of the best sellers, I'm going to throw it away. It was a bestseller. I'm looking for some obscure esoteric book. You ruined this for me. Okay,
sorry.
Never read that again.
All right, let's move on.
Now you're going to tell me that this is some classic. I reread the 1965 edition of Gerald Loeb's Battle for Investment Survival. I mean, this guy's got the riz. I mean, look at him. Can I just tell you?
Yeah.
When I think about Wall Street cool, this guy, that guy's little quote machine, okay, he was born in San Francisco in 1899, and walked 5 miles in the snow to school. Like me, got in the business right out of college at 22. He had a syndicated column back in the 50s and 60s. So he was kind of like a well-known guy. He wrote in the papers, and this was sort of like a popular book he wrote in 1935, and he kept doing editions.
Yeah.
So it's not some obscure book. You won't believe this. His whole thing was, because there wasn't a mutual fund market. They existed. Hedge funds existed by the mid 30s, but people didn't, he was like, put one egg in a basket and watch the egg carefully. Buy one stock, maybe 2. And when things aren't right, you just go to cash. That is not the advice people say today. There's no diversification. He was like, diversification. That just says you don't know what you're doing. It's like when Warren Buffett years ago, he said, risk is not knowing what you're doing, right? So really, I paraphrase that, but he says risk, Buffett said,
and Gerald Loeb was a journalism award that people will know the Gerald Loeb Awards established in 1957 for business reporting.
See, you're telling me all this. I thought these were obscure books. I'm never reading this book again. I'm going to go somewhere else.
No, these are great.
I usually read the first 5 or 6 chapters about every 2 years, because we're so programmed now to diversify, buy index funds, and just follow the VIX each day. We have to remember that if you want to make big money, you got to buy a couple of stocks, concentrate. So then we go to buying one stock and watching it carefully. Then we get up to my current obsession. I wish I had picked this up 10 years ago. I read it back in the early 90s. My dad gave me an allowance to read all of Peter Lynch's books. He wrote One Up on Wall Street, Beating the Street, and Learn to Earn. One Up on Wall Street has the most crazy name. It's I think this was his first. I like Beating the Street a little bit better. They're all kind of the same. Learn to Earn was in the mid 90s, kind of dated, but it's really for to give your kids and stuff. I can't stop reading and rereading them. My investment process this summer when it comes, because most of my stuff are, I'm sort of more of a global macro, low cost index funds. And then I aggressively rebalance those. Like I use low cost index funds, but not like some schmo charging a few bips at Vanguard saying, oh, just rebalance once a year. It's like, oh, please. Like, I'm not in emerging markets. I'm not here. Like I get this, like, I'm here to like make money. I just like those vehicles. But Peter Lynch has given my life new breath. Like I feel reborn. This is the single most influential thing that's happened to me in 3 or 4 years. Reading these books and reminding myself that I can be out in, Albuquerque, New Mexico and kill it. And being able to inspire my young trader, Jesus, and say, hey, you don't have to have an Ivy League career. I mean, it helps to have a CFA, it helps you a CFA charter holder. But like, you don't have to be from New York City. You don't have to be Warren Buffett. You don't have to be somebody or get big hedge fund bonuses to beat the street. And I think for years, people like me, and I think rightly so, have kind of ridden this big money flow that's gone into ETFs, into the passive kind of like restructuring of markets. But since COVID, we've brought a lot of younger people in. Crypto's a thing. Meme stocks are a thing. And I think if you would have asked me 6 years ago, what do you think about individual stock investing? I would have said it's a mug's game. Just give up. And now I would say, while it's not for the bulk of my clients, on a personal level, I think that there's a renaissance and a resurgence of this. And this is the blueprints. The difference is that he was putting entire portfolios together with individual stocks. I'm not there. That's not where we're at. If I want a good value asset play, I'll buy an index fund. If I want a little Japanese exposure, I'll just buy a Japan index. But specifically on this, it's about the fast growers. It's about the things that really have volatility, where you can make and lose a lot of money. That's where I think individual stock selection is having a renaissance. And I think that that's what, so if you say what's touched me the most, and I'm absolutely obsessed with, in 2008, it was when to sell and Justin Mamis technical stuff. Then I got into quant. Now I've kind of come circle, and it's like I'm back to the early 90s because it's classic. Last one, 38 letters to JD Rockefeller, to his son. Wow. If you want to be rich, I always tell people, read The Science of Getting Rich by Wallace Wattles. The silliest name of anybody ever, is written in the 1920s or something. A guy who I've known for years, who runs software in my industry, he suggested I read this. And I was like, oh, some child giving me a book to read, please. I picked it up on Amazon. And the only thing more interesting than this is all the hedge fund letters of Warren Buffett's first partnership in the 50s and early 60s.
Yeah, you learn a lot from just, it's not just books, but all letters, right? And I think a lot of people have talked about Warren Buffett's letters and how much you can learn from them in terms of his philosophy and how he, approaches, looking at companies and evaluates companies. So,
but also he used to be a young trader. He used to be a young hotshot, and to see what it's sort of like, what was Yoda like when he was 80 years old? Because Yoda's like 1,000 years old, right? Like, what was the master like when he was just getting lucky and he was just like killing it, going off Niagara Falls and living, in a barrel and living? I don't think it was luck. I think Peter Lynch is a different type of human species. I think Buffett is a different type of human species. And then you have people who are just really, really smart and wise, which is a lot of the hedge funds set. They're really wise, but I think that Peter Lynch and early Buffett, there's something different about them, and I think you have to respect that.
Yeah, and well, now Yoda's sold Apple and sitting on a lot of cash. So
I know, and now I don't feel so bad getting out of some positions last quarter.
You told me you read a novel, of kind of a finance novel. Tell me about that.
Yeah, I can't believe I waste time reading novels, but I have to. Yeah, I read this thing called The Vegan. Now, I'm a vegan, right? Hardcore vegan. 12 years. It's good for your health. And I mean, I don't like to kill little animals.
Well, okay. So now I know what was responsible for the healthy glow there.
Yeah. I'm like 85 years old, and I got this,
Well, being in the market as long as you have, Sorry, go ahead.
The Vegan's about, it's a novel Is this guy lives in Brooklyn. He has like a upstart quant fund, and there's like he makes some really bad life decisions and interpersonal decisions, and it's about kind of like this short period of time where like his life implodes. Now I have to say, just to be fair, it was an okay book. I love the subject matter. I thought that it handled that. It's not really being about a vegan. So they definitely, their PR guy, if it was you, nice job. Because let me tell you, whoever is the PR person who said, you should name this the vegan because all these vegans will buy it, did a wonderful job because I'm reading it because it's called the vegan. And then you read it and there's not a lot in there about it. But my wife said, oh, you should read it. I said, why? Because it's a vegan? She says, no, it's about some guy who runs a quant hedge fund. I was like, oh, why didn't you say? Probably they should have said, book about quant hedge fund, bad decisions, dumpster fire, and tell your wife we're going to call it the vegan. You know what I mean?
Right.
So I think it's got something for everyone. My wife and I both read it. I'm in Wall Street. She's also vegan. 2 for 1. I love the book though. But I tell you, Private Equity was the best one I read this summer.
Oh, okay.
I forgot her name, but she's the person who worked for Tiger Global and all that.
Was it Carrie's son, I think?
Yeah, Carrie's son. Oh, Carrie, you made my beach reading list, number 1 on beach reading list. I couldn't read it fast enough. Sometimes I just go back and reread a chapter because I just talk about just pulp fiction hedge fund style, the excess, the craziness, giving a glimpse into my industry's sort of the manifestation and distillation of bad male qualities, greed, insatiable desire to win, just like anything it takes to make another dollar, like just sacrifice everything for filthy lucre. Nothing excites me more. But I also think it kind of, on a personal level, I love reading that because I decided to quit doing that in my 20s, right? I decided I didn't want to live that life and I don't have what it takes, Stefan. I don't have what it takes to do that. I think that it also gives a glimpse that these hedge fund people, they're not like these evil people. They're just highly motivated and their minds are wired in a way that's very different from it's like, who wants to run to be president of the United States? I mean, you got to be nuts to want to do that. I mean, who wants that job? I think in the same way, while it's interesting to read about what rich people do, I think what you find is that they're not really enjoying the money like we would, and all the waste is because they have unlimited amounts of money, but there's only one thing they don't have, which is time. And the time thing is a self-inflicted issue. So I think if you're a person who chose a little bit more balance, or you're like me, who it's only about the business, but I still have a family I want to see, right. I don't care, like when I look at things, I expect that my team is 24/7, 365, but we also have fun. People get to take vacations. I try to be a nice boss. It's just that if I call at 10 at night, you better answer the phone. But I'm not calling every night at 10. It was just Monday when we had a lot of volatility. We're kind of busy. But if it's Friday and nothing's going on, we can leave at noon. So I get that always on, taken to the extreme. But it was good. Another book I read, not summer, it was in the spring. I hope this counts. I read The Bond King about Bill Gross.
Yes. Interviewed Mary Childs. Yeah, she's great.
Mary Child, thank you. You made my spring break reading list. What's interesting about that, I'm ashamed to say, I did not understand how influential Bill Gross was in literally creating the bond market as we know it today.
Yeah,
and
it was a great
obviously
book.
She's trying to make it provocative and kind of make him the centerpiece. But when you read it, you start realizing he invented the bond market as we know it today.
And the origins of how it got started was really interesting.
Yeah, and he's a flawed person like I am, like we all are. But when you really think about Bond King, he'll always be the king because he created the thing itself. And and you know how it is. As people get older, they get past their prime, just like an athlete or anybody else. But to have on the tombstone, you like trading bonds? I did that.
Yeah.
But you should email him on your tombstone. You like trading bonds? You're welcome.
We'll make that recommendation. Yeah.
I'll make the rec.
I'll post this and put up all the books that you've read. Now let's get into our fall book preview. I'm going to put some books out there that are on my reading list. I want to get your reaction and see if they'll make your fall reading list. And then we'll check back with you.
I'll tell you if I read them.
Yeah. So coming out in December, well, I guess this is winter, so I'm already off here. But let's talk about it because it's going to be a big book. It's The Little Investment That Beats the Market by Joel Greenblatt, published by Wiley. Obviously, Joel Greenblatt is a founder of Gotham Capital, big hedge fund manager, well known. And this is part of their little book series. I talked to an editor at Wiley last year, I believe. So any reaction?
I read The Little Book That Beat the Market back in 2006. Obviously, I was much younger back then. I followed it religiously. I took 30% of every paycheck every 2 weeks, and I plowed it into his system. He had a little website. He told you exactly what to do. It's a system. I followed that book to a T for about 2.5 years. And there's a problem with it. And the problem was the market structure changed. I haven't read his new book. I probably will because I'm kind of a fan of his. I spent a lot of my time and money doing that. And yeah, I beat the market. But I think the problem with the little books, or specifically his deal, he's got some ETFs that he has on the market that follow the original little book. They underperform because the market structure has been different, right? And I think, even he would say that there were some issues in that original system. And, if you could do it now in hindsight, hindsight's always 20/20. This is what I'll say. Even though I'm going to read it because I'm a big fan of people who are billionaires and make a ton of money, it's just fascinating. Beware of anything that's a system or the one thing you need to do or this one thing. There are no secrets. And if there's this one thing, it's because it's been that way in the past. So I'm not saying it doesn't have value. I'm just saying when people are trying to sell you on one idea or this one thing, just, inquire within, it's to sell books. So I'm a little cynical. Send me a galley. That's it.
Well,
he's richer than I am, so don't take my advice.
Yeah, and I think he's well regarded in the industry, and I think he's here saying that he's going to give you a better way to invest in stocks, bonds, and real estate.
Sure, I'm sure I'll read it because I just want to see what the punchline is.
All right, I've noticed a bit of a trend in some of the books coming out. This is coming out in October. This is also a Wiley book, The Myth of Money: Breaking Out of the Failing Financial System.
Yeah.
Tatiana Kaufman. She is a seasoned investor, apparently. And she's also author of a popular financial newsletter, Myth of Money. She holds a JD from York University, member of the New York State Bar, and she started her career trading derivatives at the TD Bank in Toronto. So interesting background. Yeah, I've just noticed this trend of books about the failing financial system.
Well, they're there to sell Bitcoin. It's all about Bitcoin and crypto. Back in the 80s, all the books, it was the same thing, but it was about buying gold or commodities or guns and dried food or goods or something like that. So every time you get some volatility or something happens, you'll get a trend for a couple of years. I remember when I wrote my book, there was this book called Aftershock, and it was about, the great financial crisis. And so I
actually did PR in that book.
I know, it's a great book, but it was completely wrong, right? It just was and it was just 1987. You had all these books out, 1987, about the coming 1990 depression. By the way, little known fact, I collect all these obscure books that were wrong. I only like to collect books about these prophetic things after crap, the late 70s. There are all these books about the coming depression of 1985, right, or the coming this, and they happen after you have a big blow up in markets or something. This book, I haven't read it. I'm sure she put a lot of time and effort into it. But here's the thing. What it's going to be about. It's going to be about how, I came from some faraway place, in this case, the Soviet Union. I lost everything because of some failing economic place, whether it's Appalachia, the Soviet system, or lost my money, trading stock. Then there's the, you know what money really is, or you know that money's not real. I agree, money's not real, never has been. And then how there's this new way. And right now, the new way, it's all going to be about Bitcoin and crypto and all that. So I think those are entertaining books, but also you have to realize I've been reading books for 30 years about Wall Street stuff, and they always have the same thing. Something wild recently happened. The national debt's going higher. Any moment now, it's all going to fall. And I've been hearing this stuff for 40 years, right? Well, and it sells and it's interesting. I think if you want to write a book now, you should write it about the coming collapse of the US dollar. You should talk about crypto. Don't talk about gold. Everybody's interested in gold is dying off. And then have some, come up with oddball investing strategies and then talk about extreme places in the world, right? And and then just be lively. I think it's a recipe for a good read. But I'm 49. I love the Jim Rogers Adventure Capitalist books. Adventure Capitalist was a great book, but right at a time emerging markets were not going to do well for 15 years. So I've kind of aged out of reading those books, but I wish her well. And I'm sure it's going to be entertaining.
Yeah, I think there's certain categories, right? There are those prescriptive books, and some have stood the test of time in terms of how to invest in the market. And then there are some that do take advantage of kind of the moment. But I like your approach. Yeah, I think there are a lot of books about the collapse of the dollar out there, and yeah, I think those are kind of interesting.
Yeah, since the mid 70s.
Yeah. So, all right. So quickly, I want to get to just a few more I'm looking forward to. This one is I think, great title, and really, I think it's going to be an interesting book called She-Wolves.
Oh, yeah. That sounds like a fun read.
Yeah. The Untold History of Women on Wall Street by Paulina Bren.
I might read that. It's my understanding it's about like a handful of women who sort of came on the scene. So like Helene Meisler was one of them. I happened to work with 3 or 4 women who, 20 plus years older than me, and got in the business in the early 80s. And boy, talk about war stories.
Yeah.
And it's interesting what they had to sacrifice and what they had to do to hang with the boys, because you really had to just assimilate to some, and it was rough. People said wild stuff to them. And when you hear them talk about it, you're like, I can't imagine that. They said back then, that was just normal behavior. Nobody cared. You couldn't complain. You just, it just seemed like a horrible environment. However, they threw themselves into their work. They were successful. And you know what? At the end of the day, money talks.
Right. A lot of talented women who worked harder than anyone else out there. So I think that's what's going to be interesting to look at the women.
Yeah. Look at Marion Siebel. So I'm interested. I think that you don't have to be a woman to read it. I think any type of book about Wall Street where people had to go against the odds, there were outsiders, there were roadblocks in front of them, and hearing about how they overcame it. It doesn't matter if it's a gender issue. It doesn't matter if it's a race issue. It doesn't matter if it's a socioeconomic issue. It doesn't matter if it's, somebody with a learning disability. I think it's important to read stories, and so that young people can sort of have a little bit of respect for their elders of saying, hey, there was a day when only like Ivy League white guys ran the system, and it was hard enough back then. But to be an outsider, I always felt that I was an outsider coming in. But when I got to Wall Street, boy, did I get schooled on, no, you don't have roadblocks. And it was much harder for a lot of the people that I worked with.
Yeah.
I could get a second chance. If you don't have the right look or the right situation, you may not even get a first chance. So I want my daughter to read that one.
Yeah. And I know this last year, there's a trend, I think a good trend about women who have worked on Wall Street publishing their books about their experiences. Bully Market by Jamie Fiore Higgins, about her time at Goldman Sachs.
Or Carrie Sun working at, the hedge fund we're not supposed to say, right?
Right. We won't say that name, but yeah. Woman I want to interview wrote a book called Wolf Hustle. She was a woman of color worked in trading stocks. So that's an interesting one. So this trend of people writing books about their experience. So I think this is going to be a good one.
I think that's very, very positive. The more people read it, and you know what? Even if you don't feel you have those roadblocks, I always think you're going to be more successful on Wall Street if you got a little bit of a chip on your shoulder and something to prove.
Yeah. So really quickly, I have two more I want to talk about. Now this is a classic that's coming out with a new edition, The Intelligent Investor. Benjamin Graham with an updated new commentary by Jason Zweig, the well-known Wall Street Journal columnist. Both those names obviously very familiar to people. We'll see what is going to be new, but apparently this is going to be updated commentaries on every chapter about what Benjamin Graham wrote back in, 1949. So again, kind of updating one of those investing classics. Is this one you've read or?
Well, I've read The Intelligent Investor multiple times. I know Jason. He sometimes will talk to me about every 3 or 4 years, and I'm sure he regrets it afterwards. I have some difference of opinions, but I think that he writes good stuff that people need to read.
Yeah. Common sense type of.
Yeah, common sense things. The Intelligent Investor is required reading, period. Security analysis, which is a little more technical, that was written years before. It's thick. I think it's not accessible to the average person. If you really think you're going to start buying individual stocks, first read all the Peter Lynch books. But if you want to go to that next level, or you're in my business, if you haven't read The Intelligent Investor, you need to have a reason why, and you need to have read like security analysis it's just a required thing. I think what Jason does is he explains that markets change over time. Benjamin Graham was a victim of his own time. He would live in a world where you could buy a stock trading at 10 that had $20 in cash. If you follow Benjamin Graham's Intelligent Investor you'll never find a good stock. It's just the market structure is absolutely different.
For our audience, what do you mean the market structures change? Just really quickly, like what?
Well, there's too much money flow, right? You didn't have forward earnings estimates. You didn't have conference calls. You got the annual report once a year, right? So you didn't have all this chatter on Wall Street. The average investor did not have
flow of
type
information.
Of information. Yeah. Right. And also just having automation and spreadsheets and things where companies would say, hey, over the next quarter, we think we're going to earn this. Over the next year. Also, the American public, very few Americans invested in stocks 75 years ago. Over half of Americans are invested in stock, less than 10% bought. I mean, in the 1920s, very few people were buying individual stocks, and those that were using heavy leverage. So it was only after World War II that stock purchasing even became a thing that people did on a widespread level. So you didn't have as much interest, and there just wasn't information flow. So the idea,
Yeah, I was just going to say, and then you had people, corporate pensions went away, and now people were forced to invest without understanding how to invest.
Well, the other thing, you would go into a pension fund or a trust department in the 50s or 60s. They just bought bonds, and corporate bonds or municipals. They didn't even buy stock. So you're talking about an entire stock market with a lot of tiny little companies, a lot of scams, a lot of stuff. There wouldn't be interest, or they'd have a couple bad quarters or a bad year. Everybody would dump the stock, and people would just forget about it. And Benjamin Graham's like, look, you can buy this for less than the sum of the whole. You can buy this company at $10 a share, and it's worth $15. You show me that today, that's called General Motors, because it might not be here 10 years from now. So the problem with following it to the T, which is why you need somebody like Jason to kind of say, hey, it's 2024, is so to say, hey, and also put this way, here's a good example. In The Intelligent Investor, there's a whole chapter about utilities. And years ago, in one of the first things that Jason wrote commentary, he says, listen, we're going to keep this chapter here, obviously. But when Benjamin Graham wrote it, utilities were regulated. And so the rules of the game were different. So if you go to it now, it's out of date. That doesn't mean that there's not interesting things. Just like in the When to Sell book, there's a little part on odd lots, which now that we have dark pools and algorithmic trading, my notes are, I just don't care anymore, but I still read it, right?
Right. Yeah. So I think it's always good. You talk a lot about these books that are still relevant somehow after 40, 50 years. Some need a little updating. And I want to get to one more book because it's not a trading book, but I think you'll be interested for a couple different reasons, but it's called Making Sense of Chaos. This is more of an economics type book. It's called A Better Economics for a Better World by Don Farmer. That's Doyne, Don Farmer, who started as an astrophysicist who grew up in the New Mexico desert. So he started as an astrophysicist.
So I'm biased. Stefan, please,
right.
All you had to say, did he grow up in a desert? Oh, that's good. Remember, did he grow up in a desert in New Mexico? Obviously a brilliant man.
Right. So he completed his PhD, came back. I don't know where he got his PhD, but came back to New Mexico and worked at the Los Alamos National Laboratory. You're very familiar with that. And he decided to apply all his knowledge built in the study of prediction and metadynamics to the world of financial markets and stock trading. It's going to be an interesting book. He developed very early on an early version of statistical arbitrage. He looked at high-frequency forecasting models. This was all many, many years ago. So he has an interesting background. It's, again, more of an economics book, but I think it's going to be very interesting.
Oh, everybody likes Freakonomics, right? And these are just more versions of it. So we all know Freakonomics, and it comes up with these provocative ideas, right? And that really brought economics into sort of like popular culture. So I think a book like this, anytime you have a brainiac that comes from Los Alamos National Laboratories that gets into, predictive modeling and robust modeling, you have to understand, you take the top 10 supercomputers on the planet. We got a couple just north of me. And so they can model things, not just weapons and stuff, but model forest fires or model whatever. So you're already talking with people who understand big data in a way that Facebook and Microsoft are 30 years behind. Let me just tell you. So I'm interested in it. I will caution people that I've done business and have clients of people from the labs for years. They haven't figured out how to make money in their sleep with the quant program, but that's not the point. The point is, I think we have all this data. We have we have generative AI. We have quantum software. A lot of it's being developed over at Sandia National Laboratories. And we need to use this to better understand. The reason the 1930s sucked was because the Fed did not have data and they could not slice and dice the data to realize, do you really think you want to pull liquidity, buddy? And so a lot of times when people get angry at the Fed today, when they pull something off like a potential soft landing or don't screw it up all the time, let me tell you, if it wasn't for all those PhDs at the Fed trying to work their data, the Fed would make even worse decisions. I'm taking the cynical posture, and I think they do a good job. So I think it's going to be required reading for anybody who wants to understand what is the cutting edge of data analysis and predictive economics models look like from a person who came from a little campus up north where discoveries are made and where the cutting edge computer science happens. Because I can just tell you, it's not like people in Silicon Valley are doing that work.
Yeah. And I would also just say, don't always put the trust in models. I worked on a book many years ago by Emmanuel German called Models Behaving Badly, which was a great book.
I love that. I read that. I love that book.
Yeah. So we'll add that in as another one as a classic. Anyway, that's all the time we have, Lee. This has been so fun and informative. We're going to post all these books. We're going to check back with you, see which ones you read for the fall and the winter, and see which ones you think have a more lasting impact in markets. But anyway, that's your time on Read the Bull. Thank you so much.
Thank you.